Hello, everyone, and welcome to today's webinar on doing business in Europe. My name is Manoj Velian, and I'm the marketing manager here at Global Upside. I'll be your moderator for today's webinar. Before we get started, I'd like to go over a few items so you know how to participate in today's event. You're listening in using your computer system speaker by default. If you prefer to join over the phone, just select the telephone in the audio pane and the dial-in information will be displayed. You can submit your questions anytime during the presentation by typing your questions into the questions pane of the control panel. We will address these during the Q&A session at the end of today's presentation. A copy of the presentation deck and a recording of the webinar will be made available to you by the end of the week. Our panelists for today are Adam Sheffield, Emma Landley, Raghu Bhargava. I'll let the panelists tell you a little bit more about themselves.
Perfect, thanks Manoj. My name is Adam Sheffield, and I'm the president of Global PEO Services. I've been in the HCM global space for 13 plus years now. And just a little bit about what Global PEO Services does. It provides employee of record services in 100 plus countries across the globe. Emma?
Thanks, Adam. My name's Emma Ladley. I'm a UK employment lawyer at a law firm called Osborne, Clarke. We are an international legal practice, a full service firm, and we've got offices in 25 different locations across Europe and Asia. I'm actually based in the San Francisco Bay Area and helping US companies navigate international employment law issues.
Thanks, Emma. My name is Raghu Bhargava. I'm the CEO of Global Upside. Global Upside is a finance, accounting, and HR outsourcing services provider. We also provide staffing services, and we have some software solutions to address some of the HR challenges that companies face on a global basis. With that, I'm going to start the presentation. And on slide 1, we talk about sort of the key considerations when you're going overseas. And these are things that I will quickly read the list, but these are things that you need to worry about. And we'll get into more details about all of these as we get into the next slides. Location, where should you be going? What kind of footprint are you establishing? A very small footprint with 1 or 2 salespeople, or a large footprint because you either have an R&D center or a manufacturing establishment. Entity setup, activity. So that's sort of tied into each other. If you have one person, you may want to do a PEO solution. If you have 50 people in manufacturing or R&D, you may want to think about setting up your own entity and things. And that's just really a footprint issue. Finding the right talent. Do you know which geography you're going into, and does that geography have the talent you're looking for? So don't go to the wrong country for the wrong reasons. Go there because you know that there is availability of the talent you're looking for. Hiring and employment law, and these are much more complicated matters because in most countries, employment is a matter of contract, not an offer employment at will type situation like we all see in the US. And so it is very complicated. And with hiring also comes the issue of benefits, both statutory benefits and supplemental benefits, things that are required by law, because a lot of the countries are very socialist in nature, and they want the employees to have a certain level of minimum benefits. And obviously, if you want to attract the right talent, you have to offer supplemental benefits so that you do get the people that you want. There are issues around tax and accounting support, which is really how you're going to manage all of your back office operations once you get the business going in these foreign locations. Managing a global operation, which is really about, do you want to centralize everything, say in a US headquarter, or do you want to decentralize it, say in each country? But that may not make too much sense depending on the headcounts and stuff. Obviously, you can think about building a shared service center in EMEA, in Asia Pacific, things like that. Again, a lot of this is dependent on your footprint and your headcount, because supporting one person in UK with one accounting HR person makes no sense because your overhead rate is so high. And so you kind of have to evaluate those in that respect. Compliance in the US company law compliance is almost negligible. There's one form that you're required to file in every state once a year, and that about takes care of it. And even if you're late on it, no big deal. You pay a penalty of about $25 or something like that, and your life goes on. But in most countries outside the US, in Europe, there's a lot of company law requirements from resident directors, registered offices, things like that, and annual filing requirements, and those need to be addressed properly. Otherwise, you are going to have serious consequences. The last item, but not the least, is very commonly known as GDPR because it's a mouthful, General Data Protection Regulations. And that's really one of the things that Emma is going to talk about in great length. So I don't want to go into all levels of detail, but remember that data protection is a big deal across Europe, and especially with the removal of the safe harbor rules and things like that. If you're familiar with them, that creates another level of risk and exposure and concern that you have to address. Moving on to the next slide. So this is where I'll go into a little bit more detail. The first question always comes about is where to. So, sorry, there is a lawnmower right outside our office right now, so I got distracted. But where to, which is, like I mentioned earlier, are you building an R&D center? Are you building a manufacturing location? Are you just hiring salespeople because you think that that particular country or that broader geography has a lot of potential from a customer perspective? And these are things that management needs to think through it. There isn't a right or wrong answer. There's obviously shades of gray. So if you go to France as an example, and you want to set up a manufacturing plant, you may have some bigger challenges building your factory and hiring the right talent because of the laws and requirements. However, many countries like UK, Netherlands, Ireland, they are very supportive of these kind of operations. It's easier to hire and stuff like that. So that may drive your decision making. Though France, I believe it's the third largest economy in the EU, and it is a great location from a sales perspective. And we see a lot of that happening in our client base where they are establishing sales offices. And then as business starts to pick up, maybe you're going to have support centers and things like that. But those are things that you have to consider up front, because what you do not want to do is hire somebody in France and decide that, oh, France is not a good location for you. The termination of that employee, even if it's one employee, can be very expensive. Going across border to Germany, if that's the better place for you, then think about that. So startup activities, this is what do you need to set up, because, and I briefly mentioned about what kind of operations you're doing and how do you want to then sponsor that. So typically, if you have one employee, a lot of companies, 1 to 5 employees, companies are doing the PE or employer of record option. It's easy to get in, easy to get out. You don't have a footprint. If things don't quite go your way, not that big a deal. However, if you are actually building a manufacturing plant, you couldn't go the employer of record route because you cannot get the permits, you cannot get everything done. So you do need to establish a subsidiary, and that subsidiary may require resident directors, depending on the country, may require a registered office on day one, even as you start the incorporation cycle and stuff. Obviously, rep offices and branches are options, but those are very short-term options. And remember, rep offices are more for exploratory purposes, which means that these people can do market research and stuff like that, maybe even undertake some level of nominal marketing activities, but they really cannot do any sales. No sales can be conducted out of a rep office. Obviously, branches create that complexity around permanent establishment or PE risk, because now what you're doing is you're exposing the parent company, the US company with the deepest pockets, to the rules and regulations and employees of that country, of that foreign location. As you establish your operations in these countries, whether it's a branch or a subsidiary, the two extremes, you do need to think about accounting setup, because in almost every country, even at a branch level, you need to have a separate set of books to be able to tell the government, this is the activity that was performed in that country. And as your footprint grows, as you become a subsidiary, or if you are a subsidiary on day one, there's a lot of other compliance requirements that kick in. So those that you have to think about and address, because in countries like France, where there are monthly reporting requirements, accounting requirements to keep the books and the originals in country, versus a country like UK, which allows you to do your accounting anywhere in the world without any limitations. There is no requirement to maintain the originals. PDFs of documents are good enough. But there are other requirements, like, for example, to take a tax deduction for an invoice, you may, in most countries, you will need the invoice to be in the name of that local entity, versus just because you paid a bill doesn't mean it becomes your deductible expense for tax purposes. And obviously tax considerations, because some countries like Ireland are lower tax jurisdictions, versus even crossing the channel into UK or France, where the tax rate goes up. And there is the regimes are changing as EU is maturing more and more, and tax rates are going up, but and the 12% tax rate is no longer available to new entities in Ireland, but this is still an ongoing issue for companies that have been there for some period of time. And as soon as you hire people, you have to worry about money movement. How are you going to make sure that you pay your employees? It's not just a payroll issue that you have to do the net computation, but you have to be able to transfer the money somehow from a US bank account into either a local bank account to pay the employees, or into some partner's bank account, so that they can fund the payroll. Because remember, your British employees only understand one currency, which is the GBP, and that's what they want to get paid in, because it's like paying somebody in the US in pounds. What am I going to do with it? I don't even have a pound account here at a personal level to take my salary in pounds. And with all of this comes the issue of exchange rate fluctuations, because the day the exchange rate goes against the employee, they will start complaining. So what you want to do is you want to make sure that you agree with your employees, no matter which country they are in for their compensation in local currency. So the British employee gets British pounds, and French employees get euro, and so on and so forth, so that from their perspective, their compensation is fixed. It's not variable because the dollar exchange rate is changing. I talked about the PE risk, and that is basically the U.S. entity having operations in many locations and having to file a tax return and exposing the company to that, the U.S. parent company to the whim of the local tax authorities, because obviously not all of your income is taxable in that country. So you need to be aware of that and manage through it properly. The other issue here is the IP considerations, intellectual property considerations, because if you have an R&D center, who owns that IP that is being developed in that country? Is it being transferred over to the US? Or maybe if you have put in an Irish or a Dutch structure in place, or a Swiss structure in place, maybe it is being transferred to that, or it is jointly owned by the US in part of your tax structure, the Irish entity, or what have you. But you want to make sure that from a legal perspective, proper documentation is the agreements have been put in place, so that and the key here is contemporaneous documentation, not just, hey, after the fact we came back and we said, oh, last 3 years of activities are now subject to this and that. But also from an employee perspective, you want to make sure that they have properly signed employment contracts that assign all of that technology that they're developing over to the company they're employed by, which is your local entity, and then that local entity is then transferring that title to that property, the development of that property to the right companies within the corporate structure. Obviously, Eastern Europe is becoming a very hotbed for R&D talent. There's a lot of availability of talent in those countries. Prices are relatively very cheap. I was in London last week, and one of our clients there has 300 people in Poland, and it costs about $8,000 of base pay or $10,000 of fully loaded cost to hire an engineer in Poland. And that's an annual amount, by the way, not a monthly amount. And if you compare that to somebody in the Silicon Valley, where at least I am based, the cost is about 12 times that. So there's a lot of reason, a lot of attraction to go into these countries, but sometimes you have to worry about the laws and regulations in those countries because they may not be as stringent, may not be as supportive of your corporate philosophy as they are in the US or in the more developed Western European countries like France and UK and Germany. I touched base on the regional centers, which is your footprint in Europe is growing, you may think about having a shared service center, whether it's in Ireland, Netherlands, or Switzerland. And those three come to mind primarily because those three, you can use those as part of your tax strategy also to minimize your overall corporate taxes, income taxes, I should say. Like I mentioned at the very beginning, that the company law compliance is a very big deal in everywhere outside of the U.S. And some of the things that I brought up is like establishment of a registered office. So this is an office. It doesn't have to have any people there, but it does have to be a real office where if the government or somebody wants to serve you a subpoena or a notice, they know where to send it. And companies like Global Upside help you provide that because even when you do not have any employees, that office has to be maintained for that subsidiary. Similarly, resident directors, the most famous company with regards to resident director is Netherlands, where it can easily cost you tens of thousands of dollars to have that resident director. And remember, these resident directors have a lot of authority in that local jurisdiction because of their title and stuff. And typically they have more authority than a director of even a public company in the US has in the US. So you got to be careful who you appoint that. By appointing a low-level salesperson, as an example, you may be exposing yourself as you have, say, an EMEA manager or a country manager. Those guys are better qualified and understand the risk and responsibilities, and you're less worried about them taking some actions that can cause grief. The substance over form, so this is a tax structure issue, and this is something that you need to consult with your tax advisors, that what you're establishing is an Irish, Dutch, or Swiss entity. Is that going to meet the requirements at the end of the year so your taxes can be, the tax structure can be maintained and taxes minimized? The data protection registration, so this is something that is required in many countries in Europe. And Emma, you're going to talk about that, correct?
We will, yeah. We'll touch on that later on.
Yeah. Taxes, obviously we are all very familiar with the income taxes, but I'll talk about VAT in a minute. Generally, in Western European countries, statutory audits and annual reports, this is a requirement for every country, no matter the size of your operations. And these are statutory audits, not independent audits. So you may retain your global auditor to do that. But you may also hire local firms if your operations are very small to get that done, and then prepare and file the annual reports that are required. In terms of accounting and payrolls, there's key filings and deadlines that you need to keep in mind. It's not just about payroll and payroll taxes. When are the taxes due? Generally in the US, we are used to ADP taking the money with our payroll and taxes at the same time and putting it into the coffers of the government. But in many countries, like in UK, the taxes are due on the 15th or the 17th of the following month. So those are things that you need to be very aware of. and reporting requirements in terms of tracking your vacation leave and things like that, and the reporting requirements around that. Management statutory accounts, obviously some manager is responsible for all of these people in the Western European geography, and how do you manage those? What kind of reports does that manager need? Local GAAP, so a lot of countries have adopted IFRS, but some countries like Europe, like the UK, still follow their own version of it, and so you got to be careful about preparing those financials in that GAAP, not necessarily the IFRS, strictly speaking. Talk about corporate and payroll taxes, stock transactions. So stock transactions like stock options and ESPPs and RSU have different taxability requirements. They may be subject to national insurance or NI, which is about 13-14% in UK. Things like that, you have to worry about it. AP, AR, how are you managing your vendors? How are you paying the vendors? Do you have the local bank account? How do you make all of that happen? Similarly, billing and collections, is it centralized that you're billing from US and collecting in the US, or are you selling and billing locally? And obviously, when you have accounting and payroll requirements, you have policy, processes, systems, expertise, system requirements, things like that. So like I mentioned, in France, you need to have that local system that is compliant with local law so that you can do the reporting requirements as necessary. So we did receive a lot of questions on VAT issues in advance of the webinar today, so I'm going to spend a few extra minutes on here. So VAT is an input-output tax, and what that means is that a business has to pay VAT in all its purchases, and they have to collect VAT on all of their sales. And unlike sales tax, what you have to do is you have to file a monthly, quarterly, annual return depending on volumes, but you have to file a return to tell the government what did you pay out as VAT on your purchases and what did you collect. That could be a total, receivable or a payable, and then you end up having to write a check. It is very different than the regimes we're used to in the US from a sales tax perspective, because even on issues like software sales, if you deliver it via the internet, it may not be subject to sales tax. If you ship a CD, it is subject to sales tax. So those are complicated rules. But in Europe, the rules are actually very simple. It's just compliance is hard for people on this side of the pond because of the requirements. There are also issues under when you are selling from the US and shipping hard product, and who is the importer of record? Because a lot of times the salespeople do not want the end customer to be the importer of record, because it obviously does put some level of burden on the customer. So they will just say, hey, the customer doesn't want to do it, so the corporate headquarters has to support it. And there are options to create your logistics hub in Netherlands. Amsterdam sounds like a great destination because it's a big shipping port and stuff. You can ship all your product into there. You can pay obviously there are processes around this, but you can pay your VAT and customs at the time of importing those goods into the country, making you the importer of record. And then there are ways to reclaim that tax VAT back from the government. Obviously, these all require planning, and in Netherlands, you need a fiscal representative for the VAT purposes so that the government knows who to go after if you somehow cheat on your tax return, because there's a lot of reliance on good reporting and good business hygiene. But obviously, as we all know, there are bad apples out there that are trying to take advantage of it. So the government needs to know who to go after. And so there are other requirements that come into play as you start to think about VAT and your logistics hub, say in Netherlands. Obviously, does the storage of goods in Netherlands, does that create a PE, and what does that mean, and how can you avoid having to create a PE even though you actually have inventory sitting in a warehouse in Netherlands someplace? And irrespective of what your product services are, VAT compliance is a complicated matter. Most of us don't understand it clearly here, and this is where I say, hey, look, you got to go hire some expertise to help you get going at least, because eventually it's like any other compliance matter. Once you understand what the compliance requirements is, filling out a form and filing it. Sometimes your early returns are more subject to audits just because you're a new business. The government thinks you may not know what to do and how to do, but as time passes and as you get proficiency within the organization, you can accomplish that on your own. But there are lots of requirements on it, and you have to break out things like hotel bills and gas purchases and things like that. So it gets very complicated. On the last slide for me, expect the unexpected. So no matter how much you plan, obviously it's a foreign country, foreign jurisdictions. Most of us don't even know what the laws are once we leave California, as an example, in Nevada or Oregon or whatever. So how do we know what the laws are in UK, which looks very, very much like US. But as you go further east, the laws do get a little bit more complicated. The regimes are different. Like I said, they are more socialistic in nature. Further east you go, and the rules are more complicated because of that. And so having that right expertise, knowing who to talk to, knowing how to address those issues, and relying on service providers if you do not have the time, energy, and wherewithal to make it all happen is the right answer. And I've listed a whole bunch of things on this slide, but we've talked about most of this. So with that, I'll like to turn it over to Adam.
Yes, thank you, Raghu. I appreciate that. Raghu, you've done a phenomenal job of walking us through the considerations of expanding international. And then what that leaves is once you've decided that you're going to go to Europe or wherever the case might be, in this case we're talking about Europe, there's really kind of two main options for how do you hire people. So the first option is employee, and kind of under the employee piece, there's two pieces. You can you could set up a legal structure, your own business entity, whether it be a branch or subsidiary, or you could utilize a PEO service, or employee of record service is more commonly known in Europe. Or the other option is a contractor. We'll talk a little bit about these different things. What's the difference between employees and contractors and how they're set up versus the U.S. There are some risks with the contractors. There's a permanent establishment question that always pops up. There are some risks associated with that. We do see companies utilize that route, and so we'll talk a little bit further about these. So some considerations when you're going to hire these employees. I think it's important that you understand your objectives, that you have a good strategy, meaning are you going to be there long-term or short-term in these countries? Are you just testing out the market? What type of services are you going to be providing in these different countries? And then the other piece is you need to consider your headcount. How many employees are you going to employ in these countries? You might have larger footprint in certain countries and smaller ones in other countries. It doesn't need to be a one-size-fits-all on how you employ these people across Europe. The third piece is speed to hire. We're seeing this over and over again. The war on talent is real, especially here in Silicon Valley. That we see a lot of talent is needed for these high-tech jobs, and quite frankly, it doesn't matter where they're at in the world. They're looking to hire them, and we I had one IT company, for example. The HR director said, I'm burned out. I've got, every time I turn around, I have a new hiring manager telling me that we have just hired people in Ireland or Japan or in Italy, and they don't know, and it's left to her to kind of figure out how to make sure that they employ these people properly. So there's the speed factor for sure. What is the speed to incorporate and do registrations in a country? You would think like banking accounts would be easy to set up in these countries. It's not like you can walk to the corner Chase and get that opened up for a company. It's much more difficult outside the U.S. What's the speed to hire? Where can it slow us down? Is employee contracts. That is not that unique here in the U.S., but I mean, that is unique in the U.S. and outside the U.S., it's very common. You have to have those in place. What do the benefits look like? And then the fourth thing to consider is your risk mitigation. How much risk do you really want to take on? Obviously, the more established, the more permanently established you are, the more risk that you can be liable for. What is your resources that you have internally to help mitigate some of that risk? What's your expertise? So moving on to kind of that, if you were going to establish your own entity, these are things that you need to consider around employment laws. And Emma, you're going to help me out with this a little bit, but one thing to keep in mind is local law always rules. So you're not going to be able to apply maybe your U.S. policy handbook, and I've seen that from clients too, that they want employees to sign off on these in Europe, and quite frankly, they could be completely against the law in that country, some of those policies. And so you have to know the local laws, and that's important to consider.
Yeah, absolutely. That's a really important thing, and something that we often see US companies falling into is a bit of a pitfall, that they might just try to use their US offer letter as a basis for hiring someone, and that's going to leave you exposed in Europe, where there's requirements to have particular forms of employment contracts or particular timeframes when you have to issue that contract. So just thinking about employment contracts, then no doubt if you sort of received an English or a Spanish law contract, it's going to look and feel quite alien to you. And I'd say you'd probably be expecting something that's at least 10 pages, at least in many cases. Having said that, it might look odd to you, and it might feel unnecessary or like there's too much in there. But actually, if you're hiring someone locally rather than sending anyone over on a transfer, then actually it's going to be much more what they expect, and it's more likely that they'll get much more comfortable with that as part of the onboarding process. There's also lots of other things to think about with employment contracts, because you might have a language difference as well. Practically, you're obviously going to want the contract to be written in English so that the business can readily get it out the file and work out what's going on with it. But actually, in some jurisdictions, there's either a legal requirement or at least a sort of very strong recommendation that you'd have that in a local language. And so often then you'll end up with a contract with effectively sort of a translation running down the side. Works councils and collective bargaining agreements are another big area where the laws in Europe can differ quite drastically from the situation in the US. And it's always something to be aware of. You could end up with a situation where employees are entitled to form a works council, or where you receive a request to recognise an external trade union. Even in situations where that's not relevant to you, then you might have a collective bargaining agreement that applies to your employees. And that can happen in the situation where there's a sector-based collective bargaining agreement, or CBA. And I think in France, for example, something like over 90% of the workforce are covered by sector-based CBAs. So as well as your contract, you need to work out what terms are being flowed down to your employee from that sector CBA. Working time regulations is a big area in Europe. There's different rules in each country, but generally speaking, they're going to set out particular requirements around permitted working hours, and there will be limits on those in many countries. There's also requirements for particular rest breaks to be taken, and obviously paid vacation, paid annual leave is another area. Just on that, as I'm sure you would expect from this, annual leave is generally much higher in Europe. We do get much more vacation than you do in the US. 4 weeks is the minimum within Europe, and you'll usually be looking at something more than that. So in the UK, for example, your legal minimum is 28 days for someone that's full-time. So that can include your bank holidays, but that's your sort of starting point. And it's not uncommon that someone would have something, more than that. Raghu and Adam have already touched on benefits, and it's just worth making sure that you're comfortable and aware of what the statutory benefits are that you have to provide in a particular company. So there might be obligations to provide a pension scheme or to contribute at a particular level. Moreover, you need to think about actually what's the package going to look like that you offer. So commercially, what's market in that area? What do you need to offer someone to get them on board and to try and keep them? And also just being alive to the fact that actually it's not one size fits all. So what works in the US may not really have the same value in Europe. So It might be that there's a more comprehensive healthcare regime, so that's sort of much less significant. Or it might be that whatever benefit you're looking at offering attracts much more tax there. So again, wouldn't be as appealing to employees locally.
Yeah, perfect.
Just a few other points on employment then, just around hiring and exiting. Background checks is a big area where we differ in Europe to your approach in the US, and we're very much driven with this, with sort of data privacy concerns, as well as discrimination issues, which obviously you have here as well. So there's going to be much more, many more limitations around what you can actually do with things like criminal background checks and credit checks. And in some countries, it might be the case that actually you can't be doing those at all. Don't forget or take away from this, if you don't know already, that there's no at-will employment in Europe. So you're going to be required to give some form of notice to your employee in most situations. So there'll be a legal notice period that's set out by law. That will be your statutory minimum. It ranges between sort of 1 week and 7 months, depending where you're looking, how long the employee's been there, and things like that. But actually, it's quite common to have something more than that in a contract. So typically, you'll approach it by thinking sort of commercially, how long do we need to replace this person? You know, are they pretty key to our business? How long is it going to take us to get someone else on board and transitioned over? Termination then is obviously another issue. So on the one hand, we've got notice periods, which you need to comply with. On the other hand, we've also got unfair dismissal protections and rights around that. So that's generally going to involve following a fair process and also having a fair reason for dismissing. And they're going to differ to what those sorts of things would be for you in the US, and they're going to be much more procedural and much more restrictive. So you might be looking at, for redundancy, for example, following a series of consultation meetings and giving the employee the opportunity to talk about why they've been selected and so on. There are some caveats around that in some countries where you get a sort of grace period when someone's first hired effectively, where they don't have the full suite of rights. So it's important just to take advice locally before you look at terminating. Finally, then, just a quick point around sort of business protection, and it's been touched on already. Make sure that you've got appropriate protections around IP, around confidentiality, and also locally compliant provisions for things like your non-compete requirements and your non-solicitation. And something that's pretty important to know is that actually in some countries, you'll have to pay an employee for the duration of that non-compete. So you need to think at the outset, you know, actually, does this person pose me a risk if they leave? And, you know, am I prepared to pay them to keep them out the market for a period of time? Thanks. Back to Adam to keep going through.
Appreciate that. So kind of the next piece that we were talking about is the independent contractor. So what are some of the advantages and what are some of the risks that you have in that kind of setting? So some of the advantages of an independent contractor, again, it's completely different than the US as far as 1099s go, but you can avoid setting up an entity, and there is no bank account needed. Essentially what companies are doing are selecting an individual to work for them, and then they wire them money. Here's the challenge, though. Here's the risk that we're seeing, and it's actually becoming more and more prominent as governments are cracking down on this, quite frankly. So a couple of things to consider is it may not be legal necessarily in that country. You might be able to do it for a temporary status, a very short term, but long term it is not something that you want to put yourself in. It really does limit your talent pool because people are not used to that type of setting. Like we talked about, it is kind of on the challenge with your permanent establishment and how does that work with that employee. It becomes a big risk across the different countries that companies are trying to do this. And there's misclassifications of these type of employees. What are they really doing? Are they really working for the employee? And then, you know, sometimes these contractors, when they're trying to negotiate when there's a termination of employment or whatever the case might be, that they're always is looking for some type of payout. In fact, I've had two examples to share with this. We had one organization that had gone this direction and everything was fine, and then all of a sudden what happened is there was a termination of that contractor, and the contractor went to the government and said, hey, this company employed me, and in France actually, and they said, okay, great, well, where's the taxes? And no, I don't know why the company in the US didn't pay the taxes, even though they well knew that that was happening. And so what happened is, this person, obviously the French government sided with the employee in France and not the US entity, and the US company had to go and pay again to make that go away. So it was a really kind of a tough spot for them. And we've also seen companies trying to move away from the independent contractors, and we've seen some stuff where, hey, let's have one of these people set up their own business and we'll run everything through that. Well, then there's challenges with IP and who owns that, and it becomes somewhat of a mess. So it really is an area where it's becoming less and less popular because the governments are becoming more and more strict on that. Emma, do you have anything you want to add to that?
Yeah, just absolutely. We're definitely seeing a real sort of focus on that in Europe, particularly with things like the gig economy that's emerging.
Yeah, absolutely.
There's case law with things like Uber and Deliveroo and things in Europe, and there's a real sort of crackdown on looking at when there's some kind of disguised employment. There's also some new sort of tax evasion rules in the UK, where there can be a corporate offence. So again, potentially employment status issues can be relevant around that too.
Yeah, perfect. Well, thank you. So the other piece that we talked about was how can you set up and hire an employee and do it legally and do it right. We talked about the setting up your own business entity. We talked about kind of an independent contractor situation, and then we talked a little bit about the global PEO. How does that work? Or EOR, or employee of record. That's what that stands for. It's a solution that's, you can hire people quickly in a matter of days versus months. What happens is you sign an agreement with one of these type of organizations, and everything's legally compliant in those countries. Payroll, benefits, expense management, all of those things, all the local compliance, all the statutory requirements, statutory benefits, all those things are taken care of by the employer of record. And what you're responsible for is the day-to-day activity of that employee. It's assigned back to you. That day-to-day activity, where does the employee show up, those type of things. So that has become more popular as time has gone on, because like we talked a little bit earlier about, governments are really cracking down on that contractor piece because they want taxes, right? They want the revenue that exists out there, and the PEO pays that for you. So if you don't have the resources internally to be able to do it, a PEO might be a great option for you. So here's some of the other advantages of a PEO. It broadens the talent pool, meaning that you can move quickly and hire these people, and they're not being hired as a contractor, which kind of puts them in a tough situation. They do have the benefits. They do know that they have an employee contract and those type of things, so they feel like they're being taken care of. The other thing is you have instant infrastructure. You can hire in days. This is a big win for a lot of merger, M&A activity, a lot of acquisitions and private equity spinoffs that we do, where they need infrastructure. They don't have a global infrastructure or workforce to be able to provide these services, and PEOs can be able to provide those type of things. It reduces the risk because you're in this co-employment piece. It gives you that opportunity that you can be flexible and you can test the market, and you're not left in a situation where you have to wind down a business entity just because you wanted to test a market and it didn't really work out for you. So it's a great way to kind of be flexible in that sense. And again, like I mentioned earlier, it's not a one size fits all. You could go a business entity if you have large headcounts and do the PEO on the countries where you have smaller headcounts. So that's the question, right? What's the right fit for you by each country that you're looking to go into? Are you just trying to test the market? Are you getting surprise hires, like I mentioned earlier about that IT company that, oh, I didn't know we just hired 3 people in Ireland. How are we going to figure that out? And do you have long-term, low-volume countries, meaning you have small headcounts in these countries, but you're going to be there long-term? Again, it's an alternative to contractors that you'll have peace of mind, and you won't be surprised by any type of fees or out of compliance pieces that happens in that scenario. And then, or does it make sense to go with an entity? You're fast growth, you have large headcounts. There might be some tax strategy and benefits based on those type of things, what you're trying to accomplish. And, you've already outgrown the PEO. One thing I will mention about that, I think it's important that if you're considering a PEO, that you look for a global PEO or employer of record company that can actually help you through that transition. Many times I see where an organization's stuck to be on a PEO, and there is no really good way for them to transition off. So if you go with a good PEO that can handle the transitions and helps you get stood up on your own, it definitely is advantages for you. With that being said, I'm going to turn the time over to Emma to talk a little bit more about data privacy.
Right, then, on to one of the favourite topics of the moment, which is the GDPR. So GDPR is quite a long-awaited development in Europe. It's been on the cards for a number of years now. You've probably all heard of it, but if you haven't already, then it stands for the General Data Protection Regulation. It's a new European data privacy law, and it's going to come into effect on the 25th of May 2018. So that's the big day at the moment that everyone's working towards with their compliance work. It is going to be a big change to the data protection regime in Europe. It's the biggest change we've had since the mid-90s. And what it's aiming to do is try to harmonise and to modernise the laws that we've got in Europe at the moment. So we've got a sort of patchwork quilt of laws across Europe. You know, there's different standards that apply in different countries. And it's the theory was looking towards a more harmonised approach. Having said that, there are still going to be some pretty big differences between member states, because the countries are able to take advantage of certain derogations, so they can set their own laws in certain areas. And actually, quite importantly, for thinking about sort of expanding to Europe, employment data is going to be one of those. So we're likely to see some differences coming in once the various countries publish their own legislation. I should also say at this stage, you know, we are still quite early on in terms of some of the details around GDPR actually being published, and there is going to be a lot more guidance and secondary legislation coming down the line across Europe that businesses will need to get on top of. So something that you do need to be aware of is that GDPR doesn't just apply if you've got a physical presence in Europe. So even if at the moment you're just thinking about expanding, it could already bite for you if you're selling services and products into Europe. You also need to just bear in mind that the definition of personal data is much wider than you might traditionally think in the US with PII. And it's not going to just be things like names and addresses of people. It's going to be other data from which they can be identified. So it might be online identifiers like their IP address or a device ID. It could be location data that you're collecting, or it could be something like an employee identity number. I'm sure you've probably heard about the big fines for this, and this is sort of what's getting a lot of the headline press. Fines for breaches can potentially be up to 20 million euros or 4% of worldwide turnover. So obviously that's pretty big numbers to be aware of. Having said that, there's also some sort of other implications in terms of your employees or perhaps your customers having actions open to them, and you know, whether legitimately or as a sort of tactical nuisance factor that you might start to have to wrangle with as well. Hopefully we will still see some benefits, and obviously sort of cybersecurity and breaches continues to be very much a live issue. So just moving on then to what GDPR actually means for you. Well, one of the key principles behind GDPR is moving towards a more transparent approach to data. So with that, we're wanting to make sure that when you collect data from people, you are making it clear what data you're collecting, what you're going to be doing with it, how long you're going to be keeping it, and if it's being transferred to any third parties, then who it's being passed on to. Just to sort of give you some examples of some of the other themes under GDPR, there's things like purpose limitation. So if you collect an email address for one particular purpose, that you're not then going off and using it for some other marketing that people haven't been made aware of. That you're minimizing the data you collect, so that actually you're thinking when you have a form or you're requesting data from an employee, for example, actually, you know, what do we need, and just limiting it to what's relevant and adequate for your purpose. You also need to be doing some homework around storage limitation, and certainly, you know, keeping your data forever in perpetuity is not going to work. You're going to have some guidance in place around what your retention periods are going to be. Overall as well, you need to be accountable and make sure you're able to show how you're complying with GDPR. It can't just be effectively through luck that you don't have any issues. You know, you need to have a whole system in place to support this. A key action as a business is going to be looking at the data that you process and thinking about what your lawful basis is for processing that. And there's different buckets that basis might fall into. So one might be that you've got the data subject's consent, so you have employee consent or you have individual consent for that. This is an area that's very much being tightened under GDPR, and there's a real focus on making sure that any consent that you do get is freely given, so it's not given under pressure. There's no consequence for not giving that consent. So in reality, it's going to be a much more limited basis that you can rely on, and is probably going to be pretty limited in the employment context in particular. Another bucket might be if it's necessary for the performance of a contract with that individual, so where you need to collect bank details to process some service to them or to pay salary, for example. Another one's where it's necessary to comply with a legal obligation, so where you need to process information in order to pay taxes, for example. And then another one is where it's necessary for your legitimate interests. And this is a big one potentially, and something we're seeing lots of focus on. There's no real sort of definition as to what the legitimate interests are, but you do need to look at balancing what you think or what the reason is you're doing it and your legitimate interest against the impact that it has on the individual. So there is a sort of proportionality exercise around that. Under GDPR, data subjects are going to have some new rights, and they're going to have some beefed up, some enhanced rights in Europe. And these include things like the right to access their data. So individuals can request copies or information about the data you're processing about them. And, I've seen some real horror stories with employers becoming quite unstuck, where suddenly employees are able to access information that was considered amongst management to be internal and is then disclosed, and the individual uses it to potentially bring a claim. There's also things around requirements for freezing data. So if someone challenges the accuracy of the data you've got, or if someone tries to invoke their right to be forgotten, so the right of erasure. And again, with all these things, you need to make sure that actually you've got systems in place so that firstly, you can receive that request, so someone knows how to put that request to you. And then once you've got it, so that the business knows how to manage it, so whether it needs to be escalated to a particular person, or whether you might have a policy in place. And then thirdly, you're going to need to make sure you've got the technical processes in place to actually implement that. So if you are needing to remove data, that you can make sure it's removed from the appropriate systems. So just quickly then, thinking more practically about what you need to do in the run-up to May. We at Osborne Clarke are working with lots of companies on this at the moment to try and get the house in order and make sure that everything is in place as far as you can. There's two reasons for this, both obviously the 25th May deadline and the penalties and things, but also lots of companies now are starting to put requirements in contracts and tender processes and things about this. So it's flowing down on a more commercial level too. So the first thing then is obviously laying the foundation, so raising awareness within your business, pulling together a project team, which is usually going to be pretty cross-functional. So it's going to be, IT, privacy, legal, HR, finance. You might need to think about where the budget's going to come from for this project within the business. You need to allocate responsibility, so who's got overall ownership, and then also just look more generally about how you're going to be prioritizing the tasks. The second stage is actually data mapping, as we call it. So this is where you're auditing what you do with data at the moment. So you're looking at within each sort of area of data that you deal with within the business, what data do you take in, what do you do with it, who's it passed to, how long do you keep it, what countries is it stored in, and things like that. You can also at that stage be looking at what measures you have in place at the moment. You may already have some policies in place that are helpful. But with the third step, you'll be reviewing and assessing. So you're doing a gap analysis then to look at the data mapping that you identified and looking against that, against the GDPR requirements. So you're looking at where your gaps are and things you might need to do to make sure everything's up to date, which might be that you need new obligations in some vendor contracts, you might need training for your staff, you might need policies. and things like that. So it is a big task, and I think for a lot of companies it feels quite overwhelming. I think it's important to try and sort of keep a proportionate response to it, and you know, there's lots of organisations out there who are there to assist with this. Finally, then, just a very quick reference to Brexit, because we can't really talk about Europe at the moment without talking about this, of course. June 2016, we had the Brexit decision, and both a lot and nothing's really happened since then in terms of where we've got to. We're not expecting any massive changes on the employment law front, although lots of our laws are based on a sort of European directive. So if you've been getting to grips with or assessing UK employment laws, then you can expect those to stay as they are for the near term. Free movement of workers is an area that lots of businesses are concerned about, and our immigration team are receiving lots of requests from companies who are thinking about steps they might be able to take around that. And just some of the things that people are doing are auditing their workforce, where they're in Europe already, so looking at who they've got in the UK, where pinch points might be in terms of particular areas of the business where they're quite dependent on European staff. There might also be other steps you can take at an early stage to try and keep ahead of the curve, so getting a sponsor license in place so that you can issue visas further down the line in the same way that you do for US employees in the UK at the moment, for example. So yeah, there's lots of grey areas with Brexit still, and for the next 2 years at least, until March 2019, we will have the status quo from a free movement perspective, and we will keep assessing what happens with the updates as it progresses. Thank you.
Thank you, Emma. We're now going to begin answering questions that was submitted during today's presentation. The first question we have is, can you please give a recap of key things to keep in mind with regards to employment contracts and termination obligations in Europe?
Yeah, sure. Hopefully, lots of that's been picked up in the session, and by all means, feel free to replay it or reach out with any questions on that. But one of the key things is not starting with your local law contract, so your US agreement, and yeah, absolutely, Adam, I'd say, you know, get local advice on what that agreement should look like locally, and then how you should be managing that relationship.
Yeah, I was just going to say to that, to make sure that you're employing them the proper way, right? If it makes sense to what you're trying to do and accomplish, what's your objectives. Yeah,
absolutely.
The next one is, can you give the options of hiring employees in countries without establishing a legal entity?
Yeah, I think we covered that a little bit too, Emma, earlier, but we talked a little bit about how that can be done. That contractor is an option. Again, it may or may not be legal. We're finding that the governments are being much more strict with that, and people are finding themselves on the wrong side of the law on that quite often, actually. Or you can go with the employer of record kind of concept, where they become the employer that's responsible for all statutory laws and compliance and regulations, where you as the client is able to handle the day-to-day activities for that employee, where they show up to work and those type of things, the services they provide.
Okay. Another question we have is, what are some of the company setup challenges in Europe?
I think doing homework at the outset is quite an important one. So just some of the practicalities that I think Adam actually touched on earlier about getting a bank account in place and things like that. You know, the company setup itself can be pretty quick, 24, 48 hours sometimes. But what can be much more time consuming is actually getting to the point where you can push the button on getting that company incorporated, and often a bank account can be a bit of a stumbling block for companies.
Oh, certainly it can. It can be challenging for sure. So I think with the setup piece, it goes back to you know, what you're trying to accomplish, right? It's not a one-size-fits-all type of answer. It kind of depends on where you're at with your business life cycle by each given country.
Okay.
Thank you, everyone, for attending today's webinar. If you have any other questions, please contact our panelists. Their contact details are visible right in front of you. After the webinar ends, you will see a survey appearing on your screen. We would appreciate your feedback. On behalf of Global Upside and the presenters, thank you for joining us today, and have a great rest of the day.
All right. Thank you.
Thank you.